Taking a focus here on CSG Systems. The company reported its earnings on Wednesday, and joining me now, the Chief Financial Officer of the company, Hai Tran, is with us, and we are happy you are here. In fact, the best annual results in nearly 2 decades, with organic growth of 7.3%, the dividend payout that increased 11 years, consecutive years of dividend payouts, making those shareholders happy. Tell me about the latest year and how you were able to achieve the best annual results in nearly two decades.
Thank you, Nicole, for having me. We have focused at CSG on a culture first, people first approach. And in doing so, we've begun to really diversify and create multiple avenues for growth, right? So when we think about CSG, at CSG, we empower companies to build unforgettable experiences. And to do that, we enable people and businesses the ability to connect, to use, and to pay for services that they value the most. And because of that, we're able to serve some of the world's largest communication service providers, along with major brands in verticals such as retail, financial services, healthcare, and technology. And that diversification strategy is starting to pay off, right? Because we go to market now with, broadly speaking, 3 different offerings, and our solutions around revenue monetization, our solutions around customer experience, and our solutions around integrated payments. And as a result, we're able to have multiple channels for growth, and we're starting to see the benefits of that.
So do you need, is a better economy better for you in that, you're working with all of these solutions for the communications industry? You mentioned some retailers. We think about what happens in the payment space. If things are moving and people are spending, is that a way better scenario for you? And do you see that for 2024?
Yeah, of course, a good economy is always a good tailwind for us. But with that said, even in challenging economies, I think our solutions resonate because we deliver some meaningful value to our customers, even in difficult times, right? Because at the end of the day, as we look back at the anxiety around the economy this past year, the trends we're seeing are that customers are hyper-focused on how quickly we can deliver a return on their investment in a tangible fashion. So, when they look at deploying our solutions, it's about how we can help them really execute on their digital and business transformations in a way that delivers meaningful cost savings and or new revenue growth opportunities.
Yeah, I know you have a new partnership in business and lending. Tell me a little bit about Lendica and maybe the AI capabilities that come into this as well. Why is this the right time for this partnership?
Yeah, so that Lendica is a new partner on our payments offering. What we've done is we've created now an ecosystem of north of 100,000 merchants. And so what we're constantly thinking about is how do we deliver value to those relationships? And one of the ways we deliver value to those relationships, many of which are small and medium-sized businesses, is to offer them access to credit in a pretty seamless fashion. And after a thorough search, we partnered with Lendica as the right solution to do that. So we're constantly thinking about how do we upsell and cross-sell and continuously deliver value to our customer ecosystem.
Give me an example about how your company works. I mean, when you think about software as a service, I know you have access to hardware and such as well, but a company that you want to build this unforgettable experience that, when you look about the description of the company, tell me about a company and give us some color on how a happy customer, for example.
Yeah, so I'll give you a great example. And you had asked about AI. This past year, we launched a new offering called Bill Explainer, right? Which is a solution that leverages generative AI in order to improve bill comprehension. And as you can well imagine, even your own personal experience, the bill you receive from many of your communication service providers can be frustrating and or confusing. And in fact, many of the calls into the help desk are really bill related. So what we've done is we've taken a tool and leveraged generative AI to anticipate and deliver explanations on changes to a consumer's bill. And therefore, what we've done is, one, not only enhance that consumer experience on the back end, but also really drive some meaningful cost savings because it reduces calls into the help desk.
Yeah. Okay, that's a good example. I look at some of the analyst calls here. Cantor Fitzgerald has a $63 target and overweight rating. Wells Fargo maintains an equal weight, has its price target at around $50. You're around 53, so you have some that are more hot on the company's outlook than others. Tell me about your guidance and how you're going to make that happen for your outlook.
Great question. We have consistently said to the market that we are anticipating our organic growth to be in the range of 2 to 6% year in and year out, with really an emphasis on midpoint or higher. And that's something we've delivered the last couple of years. And so for us, I think this kind of focus on delivering in that 4 to 6% is the new normal for us. In fact, our guidance, the midpoint of our guidance, is slightly above that midpoint of that range. And the way we're going to do that is continue to execute the way we have executed, right? Quarter turns of the wrench, focus on the fundamentals, take advantage of what is a very robust pipeline for us, and then make sure we're delivering on exceptional customer value so that we can take advantage of the upsell and cross-sell opportunities.
Well, congratulations to you and your team. Great to see you. Hai Tran, Chief Financial Officer at CSG. Thank you for being here today.